So let's dive straight into the 7 steps. I was asked to talk about how to ingrain this 4th industrial revolution into the business of insurance. The first step is to acknowledge the new reality. So I've phrased each one of these as a series of novelty items. The first new reality is that if you were running a business 10 years ago, it was mostly about grabbing market share. You figured out who's the market leader, you put a bullseye on their back, and you go after the target. Roughly the same sort of strategy, roughly the same sort of products, roughly the same set of clients, and you went after them, trying to grab market share. That kind of linear extrapolation is no longer available. At least here in ASEAN, as we discussed in the previous panel, you have current penetration of insurance at such low levels that you do have still efficiency gains to be made and productivity gains to be made from traditional businesses using technology. So that is step number 1 about digitizing existing processes. But it's really step number 2, which is where a fundamental revamp of the entire value chain is being effected. We're having to look at the entire spectrum from product development to marketing to distributions to claims management and then back to product development, a very short feedback loop between the two of them at a fundamental level. And it needs many of these sacred cows, cash cows need to be looked at from the perspective of an overhaul, and really no one is immune from this process. The second factor is that there needs to be a new focus. A lot of the times we can do this, we cannot do that. Depends very much on our internal organizational structures, on our internal processes. There hasn't really been a lot of pressure in putting the client at the center of design. But that's what we're having to do right now. It's about the customer journey, the customer experience, the customer environment. That should be at the center of the design process. And adoption of technology and change in behavior is fanning out at an uneven pace. I was in Shenzhen over the weekend, and as most of you would know, it's QR code for everything, including vegetables and fruits on the street. Whereas back at home in London, my local cafe is still cash only. And the 7-Eleven next to it will allow you to use contactless, but there's a minimum spend of £10. Oh, and there's a maximum spend of £30, so why bother? We used to think in banking that when you put a phone app in front of a client, you're trying to improve the experience compared to going into a bank branch. That was the competition. But that's not the competition. The competition is other apps that the customer has on his or her phone. They're unrelated apps, but the customer expects the same look and feel, the same user experience that they get from Facebook or Instagram or any of the others. And some of those other apps are about one-click everything, or facial recognition. So in your industry, that's the equivalent of real-time insurance claims, motor insurance claims, using photos and videos. The third step is to acknowledge the new approach. And the new approach is this thing that I really don't like saying, which is data is the new oil, the new fuel, et cetera, but it's data. Data is king, and there are at least 2 types of data that I'm talking about. Before you get personal about people's private data, there's just a lot more public data. Weather-related data, crop performance, anonymized groups and cohorts of data. These allow us to thin slice the insurance offering into smaller pieces. As was mentioned earlier, you could get on a flight, go on holiday, and just as you're about to take off, you can buy insurance for that particular trip. So the policy ends when your holiday ends. Microinsurance in bite-sized pieces is now feasible, whereas they may not have been in the past. And then with private data, as long as there is appropriate consent and there is a right ethical framework, personal data allows us to go for extreme customization and also gamification so that good behavior can be rewarded with discounts. Data about my driving patterns or my grocery shopping can be used with consent to bring down, fine-tune my insurance premium. Number 4, new value. So data analytics is not just about extracting value by insurance companies. They should enable the creation of genuine new value to the insured so that it justifies the margins paid to the insurer. To that extent, it's about reducing and preventing risk during the life of the insurer's contract, as opposed to the old style of fire and forget after the policy is written. So, for example, the device in my car that's monitoring my driving behavior that the insurance company has put in can detect patterns and perhaps let me know that I have a habit of speeding into the roundabout, and maybe if I stop doing that, my risk would be lower. Or what you see in the fitness world. Are we able to move to the second slide very quickly? Very, very quickly, and bring it back, please, whoever's in the computer. I'm going to make this personal. Oh, where is the second slide? Okay then, so it's not meant to be. Vitality. In the UK, if you go to the underground tube stations, lots of adverts that tell you the exact exchange rate between your exercise and your premium. Number of steps and the discount that you get. There is a direct mapping between them. And it's also a great example of upselling through an ecosystem. So not only will they tell you that these are the number of steps you need to walk in order to get this discount, but while I have you here, since you are into activities now, would you like subscription to this sports channel on TV? And by the way, are you satisfied with your gym membership? Because we have a really good deal with Virgin gyms, and you can get a discount. And, oh, you're wearing an Apple Watch to detect your movement. Well, here are some other smart devices that you can buy. And if you can sustain your good behavior for 12 months, you'll get a free subscription to Amazon Prime. So that's the ecosystem and the community that they have built. And when you have that ecosystem approach, pricing becomes a completely different model to what you would have if you are a single-line insurance provider. I heard the Assistant Governor earlier on talk about inclusion and how they have an explicit policy for providing insurance to the bottom 40% of households in this country. It is a fact that the Fourth Industrial Revolution has rendered feasible the provision of insurance to those that have been uninsurable in the past, whether it's through traditional means or through peer-to-peer or mutual insurance schemes. Number 5, new risks. So there is just new business that you can have from the fact that, like cybersecurity, many of our systems are now closely coupled into tight, complex Internet of Things, which open up new risk sources that will need to be insured. I asked a friend of mine who is a partner at one of the big consultancies in London, and I said, can you name me 2 jobs? One that did not exist 10 years ago, but is now a significant role in your organization, and 2, a job that was big 10 years ago and doesn't exist anymore. The first one is head of cybersecurity. That, for this consulting firm, is now a $1 billion business, and the managing partner of that is now commands one of the biggest roles in the organization. The other, do you know what the other role is that no longer exists? Head of e-commerce. E-commerce used to be a specialist activity 10 years ago. Now it has been dissolved and put into every single industry line, because it's clearly not something that you can do business without. Number 6, new competition. We'll hear very quickly from the disruptors, the upstart, startup competitors from competition coming from perhaps unexpected sources, and many of them if fintech is any guide, they are chomping at the bits. They're cherry-picking the profitable parts of large financial services groups, leaving the unprofitable parts with incumbents. And one way to react to that is to embrace them, to stay close to them, to provide, in the case of fintech, they do these fintech competitions and mentorships and so on, but also to embrace them in the way that Aviva, was it last week, acquired a majority stake in Neos. Neos is a smart technology company in London that fits these detectors at home, so that if I'm at work and the tap is leaking at home, before the water overflows and floods everything, it tells me that that's what's happening. And that company has only been around for less than 3 years, and they've just been acquired in a major way by Aviva. But new competition is not coming just from these small startups. They're coming from very large players with their own marketplaces, such as the Amazons and the Alibabas and the Tencents of the world. Some of them started their journey into insurance as third-party distributors. Let me sell you products, they would have come to you and said, or as providers of cloud-based processing services. Let me sell you some of our processing software so that we can take care of your back office. And these are Trojan horses. Very soon, they apply for insurance licenses. And there is certainly a case that they can make that they have an informational advantage given the accumulation of data over time. And ecosystems are very much like a club. You have happy hour in the clubs, right? Before 10 o'clock, if you turn up, the drinks are cheaper because they want to get critical mass to come in. So there's a lot of free stuff that get thrown in, lost leaders. And in many of those ecosystems, insurance is just incidental. It might even be one of those free stuff that gets thrown in the happy hour. And so then for us, whose principal line item is insurance, that becomes a difficult thing to compete with. In your case, it's not just the Amazons and the Alibabas and the eBays, it's also potentially the car companies or the manufacturers of sensors who could argue that we have the data and therefore we have the competitive advantage. And then lastly, my 7th point is new organizational culture. This relates to people and skills. If you want to have a chief digital officer, who do you hire? It's typically a senior role, so you can't just hire somebody with a technology degree straight out. It's not an easy role to hire into. And we were talking earlier about Daisuke Isawa, who is a Japanese gentleman, co-founder of LifeNet in Japan, who's recently been hired as Group Digital Officer in Hong Kong for AIA, a new role created for him. But there aren't very many of them out there. So the type of skills you need is important. I don't know if underwriting skills will experience what doctors apparently are experiencing, where if you're a senior doctor and part of your value add was your diagnostic intuition, you could look at a set of symptoms and be able to tell what was going on because of your years of experience. A junior doctor or a nurse apparently is now able to make similar or better diagnoses using tools that are available there right now. So you need people for innovation, and that is a different set of skills than before. The second part of organizational culture is how do we engage with people so that it is a culture of innovation as opposed to hierarchical command and control. One thing that a fintech startup or an insurtech startup doesn't have is number of people in the organization. And if you believe that in this world of disruption, no individual has a monopoly of ideas, certainly the boss does not have a monopoly of ideas, you want to be able to crowdsource ideas from your people, then that store of ideas resides in the large organizations. But for many of them, they don't have the ways and means to tap onto that wisdom of the crowd. But if they can, that's a source of competitive advantage. And then thirdly, lastly, organizational culture is about the culture of execution. When you say we're going to do new things, disruptive things, from inside a large traditional organization, how would you do that? Do you separate it out, or do you do it inside of existing divisions and run the risk of it getting suffocated by the existing leaders of that business before it can flourish and develop its own wings? What sort of performance criteria are you going to use if all of a sudden you say that we are now going to be a customer satisfaction-based organization? Will you have a DHL-style tracker for every case, or a TripAdvisor-style rating mechanism for every interaction? So these are non-trivial things. Getting the right balance between old and new, the right sequencing, the right sponsorship within an organization is, I would argue, the single most important differentiator that differentiates, at the moment, one big firm from another big firm. One big firm that has been able to move across, another big firm that has not been able to move across. In the banking world, you just have to take a look at the last 5 years and the movement in market capitalization amongst those that have adopted good digital practices and those that have not been able to do so. You can see the differentiation is quite obvious. So I'm going to stop here and go into the panel, and we can have a bit more of a discussion on that. But for now, these are the 7 things that I hope will give us a framework for us to have a discussion on this. Thank you very much. Thank you very much for your time. Appreciate it.
Thank you very much. Ladies and gentlemen, Professor Lutfi Siddiqui, thank you so much for that wonderful presentation. I would like to invite you to join us up here and perhaps take a seat already, if you will. And in the meantime, ladies and gentlemen, before I welcome your moderator, a gentle reminder, for those of you who are not using your microphone, please check to make sure if it's activated and green, you can press it once to turn it off. All right, having said that, it's time to introduce your moderator. Ladies and gentlemen, he is the Chief Data Scientist of Artificial Intelligence Malaysia, with over a decade of experience in data science practice and consultancy, and as the first data scientist hired by MDEC, Malaysia Digital Economy Corporation, he was instrumental in driving Malaysia's big data analytics talent and industry developments. He founded ONS, a sports social network startup that was then adopted by the Malaysian Ministry of Youth and Sports for a nationwide campaign. Ladies and gentlemen, here to lead the way for our next discussion on insurance in a digital economy, let's welcome Mr. William Yap.
A very good afternoon, ladies and gentlemen. The world's largest taxi company today owns no cars. Who am I talking about? I think we all know, Uber. The world's largest hotel owns no buildings, Airbnb. The world's largest store owns no goods, Alibaba. Welcome to 2018. Welcome to the digital economy. Now, we are here at the 3rd ASEAN Insurance Summit. What does this all mean for the insurance industry? Insurance is an industry at a turning point. It is predicted that the insurance marketplace will soon exist largely in the digital economy. Consumers of all ages are becoming more comfortable using computers and smartphones to make online electronic transactions. The objective of our Insurance in the Digital Economy panel today is to discuss the current status as well as the future for the insurance industry in a growingly digital world. Now, we are honored to have such a distinguished panel to tackle such an important topic today. Firstly, I would like to invite Mr. Arthur Lee, who is the Executive Vice President and Chairman of Southeast Asia for FWD Group. Please join me. Next, we have Mr. Bill Song, who is the Chief Operating Officer of ZhongAn International. Next, we have Dr. Woody Mu, who is the founder and CEO of eBao Tech Corporation. finally, I'd like to invite Ms. Khoo Ai-Lin, who is the CEO of Tune Protect Malaysia. We also have Professor Lutfei joining us, who gave the talk earlier. Now, my name is William, and it's my great honor to be the moderator for this session. Now, I plan to keep the panel discussion flexible. First, we will start off with talking about the present status of insurance digitalization. I'd like to direct the first question to Arthur. So, Arthur, how are insurers responding to the customers and tech forces driving change?
Thank you. Well, I think the ever-changing dynamics of how the industry is reacting to insurtech is something that is very relevant for insurance companies that are maybe not on the crux of adopting this technology today. And it's very hard, like Ludwig was saying earlier, very established companies trying to cross over and separating that culture between what is correct for the industry and what is correct for the company going forward. Now, there's a lot being said about how the economy, the customers today are very familiar using mobile phones, doing online transactions. And I think that is very important. It is more important to also emphasize that understanding of the customer engagement, what the customer really wants and needs, very personalized, very tapered products would then be the norm in finding out how to adopt this technology. What was said earlier by Ludwig as well, I thought was really relevant, and this is something that I wanted to speak to as well. There are a lot of very agile, small startup companies that have very pointed, adaptive technology. So for very large companies who do not really have the bandwidth or the insights to really kind of build this eco-structure or system by itself, we see a lot of transactions, a lot of interest in acquiring these insurtech startup type companies. So we see this as a trend going forward. We also see customers being wanting very personalized service. We see claims being handled telehealth, where a lot of the claims payments are bottom-up approaches. So I think these are the things that some of the trends that we will see as how the insurance industry is reacting to the change.
Oh, thank you very much for that. Ai-Lin, as the CEO of Tune Protect Malaysia, how has your company responded to the tech revolution?
Well, I guess if you look at it from a very digital perspective, I think first and foremost, what's very important is you've got to ask yourself where your company is in terms of, is it a company which is a giant insurance company, or is it a company which is a conglomerate that has a lot of diversified businesses within, and how you actually leverage on the ecosystem. I think referring back to what Don earlier mentioned about partnerships, and that's very important because many a time people think about it when you talk about technology and all. A lot of people, I think, are still looking into not about talking about selling or talking about marketing or innovation. People are still looking at automating process. There are some still doing that, but it goes beyond that, and it goes beyond B2C as well. Because if you talk about critical mass acquisition, you're looking at B to B to C. And that's basically what we need to drive on. And if, say for example, you also need to, how do you capitalize on that opportunity? Looking at it from, say for example, if you start off right now, people tend to think that, hey, you know, Ai-Lin, you know, you're in Tune Protect and therefore it's a travel PA, and because there's an Asia within the ecosystem, right? So, but I think it goes beyond that. Before you leave your home to go to the airport, you start covering from your house, right, to going on to coverage of yourself for delays, flight delays and so forth, and you go onto the plane. Now we're looking at opportunities, and you want to, you got to buy something for your child or whatnot, and you can actually purchase it because there's also Rocky, which is a Wi-Fi on the plane, and then you can actually purchase that and make sure you collect it at the airport when you arrive, or you can actually get it sent to the hotel or wherever you are. So it goes beyond just a travel PA, and even the delivery of it is guaranteed, right? It's insured, right? So a lot of this ecosystem that we need to look at. Another area that I think where we are looking at is also not just us, but I think the industry as a whole, looking at it from a national agenda perspective. I mean, if you look at a national agenda, we'll talk about properties, for example, right? And I think a lot of us are very concerned about the glut in the residential properties and so forth, right? And how do you manage that? Is there an opportunity to take it further in the sense of to avoid any forced selling if, let's say, a person doesn't have the holding power? So where do we come in? We can actually look at, for example, a rental guaranteed perspective, right? And then bundle in and then help a person to have the holding power. You can sell it to investors and so forth. So I think if you look at it, my take is that you really need to look at it from a B to B to C, leveraging on the needs and the opportunities, and how you actually move it out into the market, leveraging on also InsurTech capabilities, right? InsurTech capabilities doesn't mean you do just a homegrown, always on the lookout, which one can complement your business in that sense. So I would say these are the key areas that I would be focusing on. Yeah.
Okay, thank you. Professor, you mentioned during your talk earlier that we have new tech emerging every decade over the past 50 years. So do you mind maybe elaborating a bit more on what is so special about the current trend? What do you personally feel so special about what we are experiencing now in 2018?
Sure. It's really the confluence of so many thrusts of technology that have come on stream at the same time and being adopted very quickly by very large numbers at the same time. And even before they get adopted, they get disrupted, and you have that process continue on with a feedback loop that goes around the world in all sorts of uncertain directions. So it's the complexity and the layering of one technology over the other, which puts us in a world of, in academia and in textbook parlance, you have that classic separation between risk and uncertainty. Risk, which you can model and parameterize. You know when you're playing football that your risk is that your opponent is going to kick the ball to the back of your net. But uncertainty is that when you don't know whether you're playing football or tennis and the referees are fighting amongst themselves. And it feels a little bit like that. You have the thrust of technology coupled with extraordinary global monetary policy that causes challenges for the investing context, coupled with domestic politics, which is a lot more volatile and polarized, coupled with international relations, which also now seems to be very incendiary. You bring all of those things together, and it is a very special time right now. At a macro level, at a social level, this can be hugely dislocating, or it can be hugely empowering. And this is the thing. The paradox here is that at an aggregate level, you could argue that we have now available to us technology that can solve every problem anywhere in the world. It's an age of abundance. But the problem is not in aggregate, it's who owns what. And there is an inequality exacerbating element to that, which causes issues. So you could look at this as therefore unleashing a lot of opportunities, which is what I believe it does, genuinely. But it needs deliberate design, and it needs deliberate leadership. And this is the time where leadership is at a premium, whether it's at a company level or at a national level.
All right, thank you. I would like to actually go back to Eileen. So Lutfi mentioned, we have technology to effectively do pretty much anything we like. We have abundance of potential areas to, go into to, advance. So what do you personally feel is the biggest opportunity for insurance innovation to deliver value?
I think if you look at it from the perspective of technology can do anything and everything, what is so important is also what are the data available, right? Because if you are just looking at just technology, and without understanding the customer, are we targeting the right segments or not, you see? And that's basically a very challenging situation because we don't have a centralized data. We have our own data, right? So basically when we have our own data, you basically look at it from a smaller aggregate compared to the overall aggregate. That's maybe something that has been raised actually in discussions from the industry to the regulators. And it's one of the agenda that we should continue to move forward to get a better drive towards looking at customers and wanting. Basically, customers also, if you look at it, right, I mean, just in Malaysia, right, we've got 32 million. Of course, to Bill and Woody, that's very small compared to your countries in China, right? So 32 million, about 77% actually have access to internet, right? And if you look at that, right, out of the 77%, about 90% or so access it via the phones and so forth. But interestingly, if you look at out of the percentage of people who use internet, smartphones and all, in Malaysia, only about, I think about 48% actually do the online shopping, actually do purchases, right? The others are basically using it for communication, WeChat, all sorts of those, right? So I do think there's a lot of opportunity, but what people want is, if you really start looking at the technology, you have to start unbundling the products. And this is, I'm more so for the general insurance. I think the life insurance, I will leave that to maybe FWD chairman to talk about that from the life. But for the general, I think even we talk about very simple product, like say, for example, travel. You can actually unbundle it, to just do luggages, to do delays and so forth, right? And people are looking at just wanting to pay for what they feel they need to cover. So we must be flexible. The question is that, is there an appetite, and there's a lot of things that people want to do, but would they be able to get or acquire critical mass, right? That's a question that we will always need to try before we know. But the other bit is also looking at people now, if you look at the millennials and whatnot, that saying, with all this transportation and if I look at the cars, I park at the MRT and I drive there and I hardly use my car, should I be paying less? And we've heard about usage-based and so forth, right? And the question is this, right? If we need to start looking at that, it's also something that we need to try. I think there's a lot of times where we look at it from very much a very risk basis. True enough, but I think we need to try. We don't have enough of that in the industry that we need to push further. And that's also back to the situation of data, right? So a lot of these things that we want to basically have the appetite to really drive and push from that perspective using technology and data, and also the propensity. Also dynamic pricing, right? I think from the aviation, a lot are really looking at dynamic pricing, from which airport to which airlines to the type of customers' behavior. We are capturing a lot of this data. And that's something that should replicate to other types of products and industries as well.
Right.
Thanks.
Thank you very much for that, Eileen. I think you really, it all comes down to data, essentially. I think a lot of people get this misconception that data science, you can solve anything with technology, but all comes down really to the data, the quality, the quantity of your data available to you. And that all comes down to how you go about digitizing, go about your digital transformation within your organization. And I'd like to hear the thoughts from Bill on, based on your experience as CEO of ZhongAn International, how can insurers equip themselves for their own digital transformation?
Very good question. Firstly, I think I share a lot of same opinion as what the professor mentioned. And professor mentioned there are many new things. And from our standing, a very important thing should be open-minded, especially the very senior leaders. And only when you're open-minded, you could start to get more technologies. As what we did in the last 5 years, ZhongAn actually in China is an insurance company. But just after many years, the more we touch the technology, the more we feel scared. We found huge opportunity. And we cannot build all the technology by ourselves. In each individual verticals, there were so many experts, so many better company, whether you can cooperate with them. Maybe I can give an example. We just recently set up a JV with Colgate. This is a toothbrush company. And we never knew they have a wonderful technology before, because now they have Bluetooth toothbrush. They can get all the data. And they have an algorithm. They know when you brush your teeth, which side you didn't clean well. And when we know that, we found, wow, this could be a potential big opportunity, because nobody knows that whether you clean your teeth well. So nobody can insure tooth decay before.
Wow.
Right?
That's amazing.
But then we feel scared, because there are a lot of this kind of company, the traditional company, maybe they not even digital, but they have a lot of technology. They have a lot of potential. So just a simple, this is a very simple example. And so when ZhongAn in the last 5 years, we worked with different kind of industry in China. We try to help them. We try to bring insurance as a service. So we found we have to be open-minded. Otherwise, currently we already have more than 1,500 engineers. So as an insurance company is quite a weird number, but we want to totally embrace the whole technology. That's the reason, even now, we decided to have a two strategy, because we think we have to be open. In one side, we are still a very good insurance company. Our solvency ratio was 681% last quarter. So I just try to emphasize this. But at the other side, we already want to become a pure technology player outside of China. We don't want to do as an insurance company any longer. We want to output our technology and work with more partners. And we found so many wonderful partners which we could bring them together to make the whole industry better. So I just try to summarize a little bit. If you want me to say what will be the most important factor, I think it's still mindset. It's a mindset game. And the more you know you can't, the more you should embrace the whole world and be open.
Thank you.
Yeah.
Thank you very much for that. It's I would like to ask Dr. Woody Moo's opinion on that, because as what Bill Song mentioned, is the talent is very important. I think you are the most you have done a lot of research in this area. Would you like me to share your thoughts on how Bill and other insurers can go about hiring the right talent?
Well, I think we are very interesting in the last few years. Bill probably also know that we are actually being poached by all kind of companies as the insurance industry wants to become more technical, because we were one of the early pioneers to try to make it very technical. We are using a lot of technology in this work from when we started 2000. So in a way, we are very happy also to see that the industry is embracing technology, and absolutely right, the talents and the mindsets are very, very important. So, there's always, I heard this long ago, that technology enabled transformation. The three statements: technology is easy, operation is difficult, people are impossible. So whether you get the right talent makes a huge difference in terms of adopting technology. So I share a lot of views here. There are a lot of technologies today. Insurance industry is probably using a tiny, tiny, tiny fraction of the available technology to move ahead of technology. To move ahead their business. So it's not about the limitation of technology. It's really about our own kind of mindset or our conservative kind of attitude. I think, not just insurance companies, but also regulatory bodies. There's a lot of other things. So I think talent is very important in all aspects, not just inside the insurance company. It's also in the insurance channels. So we are very actually actively now enabling insurance channels to become very digital. Okay, not just insurance companies. So in China, we're supporting the top independent brokers to sell life insurance all through a cell phone, and the car dealers to sell insurance, not just car insurance, all the other insurances on a real-time basis. All this were not available to channels. In the old days, channels are very behind insurance company, typically in terms of technology, in terms of investment, in terms of money, but more importantly, in terms of talent. A lot of those channel companies, they don't even have any sense of IT team. They kind of live just on paper for many, many decades, right? So when they suddenly are exposed to this kind of technology, the talent shortage is one of the biggest challenges for them. If we solve that problem, I think the industry will collectively move a huge step ahead.
On that note, Woody, I would like to ask, what do you feel will be the role for insurance agents moving forward toward in the digital future?
So we are very strongly believing the agents will be there. They will still be there for many, many years to come. Our view is that insurance in the digital age will be so-called connected insurance. So insurance will be connected to all kinds of business and life events, affinities, embedded insurance, whatever. But the element of the advisory service is always there, especially for the bigger insurance policies. So the more complex, the bigger the transaction, the more advice you will need to have. Consumers will never become expert in everything around their life. So agents will be more and more important actually to assist consumers to make the right decisions. So in the morning there was a comment about whether agents are salespeople or advisors. I think that's a very valid question. If agents, brokers are truly advising their customer, they have a lot of value to add. But all of them are moving to digital platform. So they are talking to their customers now. In China, the good agents using WeChat, they can talk to hundreds of customers every single day. They don't need to face-to-face sell anymore. They sell through WeChat. So that's the kind of change. So everybody is going digital. I do not separate digital versus traditional insurance. Every insurance will become digital. Insurance agents will also work digitally. They will become much more efficient. As a result, they start to sell much smaller policies. In the life insurance industry, for a long time, people believe agents don't like to sell small policies. That is not true anymore. They start to like to sell small policies because by using WeChat, mobile phone, they can sell a lot of small policies. So it's actually a good business for them.
Yes.
And as a result, the expense ratio actually become much smaller for the insurance companies. So that's, I think, fundamentally the value of digital. Digital is cutting the expenses.
Yeah.
It's reducing the waste. It's improving the efficiency. And that benefits all channels, traditional channel as well as the so-called online channel.
Yeah, I think this is a very, very valid issue. I think I've attended other insurance conferences as well. There was this one quote by an insurance agent which I thought was very, very interesting. She was saying, like, they don't want to end up being a taxi driver, end up being like a taxi driver in an Uber or Grab world. I'd actually like to hear Arthur's thoughts on this.
Well, I think one of the areas that we are looking at is how to increase the sophistication of the agency force. Using big data, using analytics, using different types of technology, you're able to actually create a kind of a front-end sales module that is a bit more in line with customer needs, predictive what the personalization of what the customer wants. And I think this will be the trend going forward, is how the agents will be assisted by technology and assisted by front-end technology backed in with a lot of understanding of data, understanding of, again, the analytics on how to use that data, and how to consume that data, whether it's, and to make that work. So I think the agents in the future will have a lot more technology behind them in terms of analytics, in terms of materials to be able to personalize sales.
I see. I'd like to ask Bill now, based on what you see, going on in around the world in Southeast Asia, who do you feel is making the greatest advancement in insurance technology, and what are they doing right?
This is a very difficult question.
You can see yourself if you want.
Because honestly, I don't want to comment any company, and because it's not fair, because I don't understand what they are really doing. And I can only say, if you let me comment Zhong'an, and I think we are still far away from what's the, success. I didn't see anyone who really did a fantastic job, and because we do believe the whole insurtech can change more, can accelerate the whole industry more. Maybe I would try to emphasize several big giants, what they are doing, and because like Grab, like Gojek, they may have a better foundation than any of us. They have a huge customer interaction. If you look at this region, I do believe if they do things right, they could work very close with insurance company, and they could create a lot of fantastic products. We thought things happen in China, as exactly you mentioned. 2 years ago, we worked together with Didi. And Didi drivers are not that rich guy. They are poor guys, and they work very hard. So they cannot purchase yearly a health insurance cover for their daily life. But we worked together with Didi at the time how to use technology to change insurance, to create something better for them. And we found some simple way to really break the whole policy into very small ticket size. And it's just like a user behavior-based health insurance. And each rider have maybe 20 trips per day. He rides very hard. So why not, if technology allowed you for each ride, they just subscribe overall cover, and you just give whatever endorsement on some insured. It just makes things so easy. Each individual time is even less than 1 RMB, even very, very cheap. But then the more the person works, the more his benefit grows. So we like this a lot, and driver love it. Now we issue around 3 million of policy per day or endorsement per day. So this is a very good example, how technology can change the traditional customer experience. So I do believe if we're talking about in Southeast Asia, this region, we hope we as an insurance company, we should work together with those giants and try to fully utilize their network, their touch point, their data, and to really create something meaningful. Not really try to confuse customer. I still remember this morning, there was a lady asked a question to the panelist. Do you think this complexity will become a problem? And then my question will be always, I try to ask back, why our policy are so complicated in life? Because you have to leave room for agency. You have to add up a lot of things for your agent. So then you have to make it complicated. But then if you have giants, and if you really embrace the external party, whether you could have some synergy, whether you could fully utilize the cloud-based system to issue millions policy per day to make things more, and whether you can use AI or data, that is the place we really love. All the people win in this situation.
Yeah, I would actually hear Eileen's thoughts on this. You know, as Q Protect Malaysia, you have a lot of connection to giants, so to speak. Like, what do you feel about what Bill Song said?
Well, I think let's look at basically more of a Malaysian context. I think a lot of us in the industry, there's no one insurer that says you're a pure digital insurer. And the struggle that we always have, even within our organization, people tend to think we're more the techie one, right? You still have your conventional business. And I think the challenge is always having the conventional business. We will have our conventional underwriters and so forth. And I actually tried to bring people from where they are towards the digital and the new way forward. I can tell you it's really tough, right? Mindset is what Bill says. Mindset is a challenge. However, we still need to know that at this point in time, whatever we say, the conventional channels is still a very strong backbone as we take time to build the digital space. And with that, I think if I look at it, if you ask me, William, on that question, I would say that, you can keep trying, but I think it has come to a point in time, like if I were to look at it from my organization perspective, I need to basically have, in a way, 2 teams to drive that. If not, you always have that conflict and that kind of priorities, because the mindset change is the most difficult. Now, then the other bit is also, if you want to look at doing products and stuff like that, we talk about dynamic pricing, and just now earlier, I think Woody mentioned about low premium products and that agent will be keen to sell. I think it will be a while before we reach that stage in Malaysia. In China, the population is a lot. In Malaysia, almost everybody has got some interaction with insurance agents or whatnot. So I think what is important is to have that differentiation for the products that we have for our conventional, and to have some tweaking for the direct channel or B2B2C, which I feel is more of an affinity to get a critical mass. And personally, this is just my personal opinion, I think one of the first tumbles that we always have is we put out, when we do something on the internet and whatnot, the message that we have is that we have 25% discount, we have 10% discount, and to me, I always say that's for me personally, I think that will be a no-no. It's about differentiating it. It's not about cannibalizing and just giving away commissions. That's just my perspective of things. So if you want to drive, we have to be cognizant that it takes time to drive the other side, but your conventional business needs to be still there, where we are right now. And basically, you might need to look at having 2 teams to do that. Also, the other bit that I wanted to say is many a time, we are also in this scenario whereby, okay, the insurance companies embracing technology and driving it the digital way, right? Or you have a situation where the technology companies and the startups are coming in and they're driving business in a different way. So it depends on how you see your business coming in. I think that's a very big fundamental question. Whether you see it as just an enabler for your business or you see it from a technology perspective, how you want to drive business differently. So that's a question for you all to think about. Yeah.
You mentioned the importance of mindset, yeah? And Professor, at the end of your talk, the last point you talked about was the importance of new culture, about how you go about recruitment and training. Do you mind maybe elaborating a bit more, on how insurers can really, go about changing the mindset? That's such an important step.
You want to comment on that point?
Oh, yes.
Maybe I want to just add.
Yeah.
I mean, just a little bit optimistic view about conventional business as well as the so-called traditional people or way of doing things. I mean, we are now enabling a lot of real-time issuing policy, including big policies. So traditional life policy, motor policy, not only in China, in Thailand, we are now enabling about 10% of motor policy also digitally now in real time. Digitally still by people, right? Not by B2C, it's B2B2C. So but even a year ago, they were still sending paper or PDF or email to each other. Today, it's real-time issuing policy, right? So in a way, I think it's possible to change, and I still believe the digital value is still going through the primary old business, so-called conventional business. I think that is very tangible. It's an immediate benefit of efficiency improved maybe 10 times. It's not a small kind of financial reward for insurance companies. So we are actually driving very aggressively to digitize so-called traditional or conventional business, both car insurance as well as the long-term life, the traditional life insurance, ILP, universal life, all this stuff. So we are seeing people changing literally in a few months' time from 100% manual underwriting to 100% automatic underwriting. It's doable. It's not fundamental.
Sorry, please continue.
Yeah. So I think, Woody, what you said about the processing, automating the process, yes, I think we're there, and we've got the regulators pushing that. A lot of things, now it's all e-cover notes and so forth, and we enable tools, right? But what I'm saying is that beyond, so there's 2 things, the thought about automating process, making it faster and effective. The other one is a new way of doing things, looking at it from an on-demand, right? Which is different. So one is more from the processes, which I think the regulators have pushed e-payment, claims, everything, cover notes and all. I think the other bit is moving towards the on-demand. The sort of in Malaysia still relatively new, and whether we have the appetite to really try that, and then is it how we're going to reach out on that. So that's basically the Insurtech folks bridging the generation, driving that through. That part, I think we are not quite there as yet. Yeah.
If you don't mind, at this point in time, I'd like to actually share a question from the audience. It's very relevant to what you guys are discussing. There's this question from the audience. When we simplify products and process, we are also opening the holes for fraud and unfair claims. How do we go about protecting insurance from being abused? I'd like to hear Woody's thoughts on this question.
Well, I think simplified products or scenario-based business, such as the kind of riding on other business, I do not fundamentally believe add more risk. It's adding more data and demands new capabilities from insurance companies. So you need to get help from other people who have a lot of AI or data ability to help you to underwrite and manage claims. So in the old days, insurance companies are too self-contained. They believe they have all the capabilities in-house. No, you have to work with a lot of other parties. But these are available. The technologies are there. It's just how do you find them and tap them? So I do not believe fundamentally the digital adds more risk. I mean, it adds more business. A lot of business that used to be impossible to underwrite because expense ratio just killed it. Today it's doable, but at the same time, it demands new capability in terms of underwriting, claims management, everything. Yes.
Can I hear Arthur's thoughts on this? It seems like...
Yeah, I think for our group, primarily for the composite license that we have in Singapore, where we are completely D2C, and that's for general lines like motor, travel, PA. And we also have a life composition where we sell a lot of term life. But one thing we've understood is that, again, as what Woody was saying, you can't do this by yourself. You have to go out and find your best provider. So right now, we have a company looking at profiling our claims, putting in the perimeters, and you can flush out your suspicious claims with the push of a button. And this goes through the entire suite of the claims. So it's very, very efficient and accurate. And probably you, out of 50,000 claims or something, you probably pick up something like less than 5 to 10 that are quote-unquote fraudulent.
Yeah, I've read of this startup somewhere in Europe, I believe. What they can do is they can, whenever you make a phone call to the insurance company, they actually can really, break down, I think, like 150 points within your voice to truly identify that, the person they're talking to is the policy holder. I mean, I think that's one of the ways that technology actually is helping tackle fraud as opposed to encourage it. Yes,
Sorry, I may try to give more example. Actually, that's what I said. The more you know the industry, know the other industry, the more you're scared. And how good the technology they have. And what I could share a story now. Zhong'an Technology, we have one line called H line. That's hospital line. We directly connect with the hospital information system, HIS system. So we work with partners. Theoretically, we can do automatically claims when you pay your bill, which means when you paid it, it has been automatically split between this is a national cover, that's your insurance cover, that's your own cover. So the customer only need to pay the remaining. So, which means we got all the information about the customer's prescription, all the dosage, or the treatments. So it's already everything automated claims. So if you connect with the third-party data source, and I think that's the best customer experience, and you fundamentally solve all the fraud issues. We saw the same cases in motor claims. In China, there are some startup companies, they just draw the whole cars for each individual parts with XYZ dimension. So if a car crashed, they already built all the logic behind the AI with AI engine behind. And they will detect which part you claimed, hey, this is broken. So they will have all this rating behind, interaction behind. So why, this very front end, the very end, two parts broken, but in the middle, nothing happens. So there are a lot of this kind of AI technology. It really scared Zhong'an. So when Zhong'an tried to, at the very beginning, we said, we are very good in InsurTech. We have 1,000 very good engineers, and we show a lot of success in our own business case. But the more you cooperate with the other industry, the more you find, okay, you have far road to walk. So that's now we are trying to embed it with more tech player. So go back to the question, I would say, fully agree with what Woody mentioned. Digital never opened a window for fraud. Actually, if you do it well, if you find the right partner, it could be a fantastic partner, and then you can fundamentally solve a lot of issues.
Okay, it's you mentioned that for insurer you have to be brave to take on these kind of opportunities and chances. I'd like to hear Professor's thoughts on this, because I mean, as much as the insurer wants to be brave and embrace technology and so forth, at the same time there's so much reserves you're holding on to, so much responsibility you have to your policyholders. So how, I think it all comes down to the mindset, right? Getting the right mindset for your company, the right balance and so forth. So how should insurers go about that?
So on this topic of whether you get fraudulent claims skyrocketing or not, McKinsey has a study which I think is available online, and it follows a US insurer, car accident, that allows you to just take a photo and upload it, and you claim, and it automatically gets paid without human intervention. And of course you have fraudulent claims, but the net analysis is that you get a lot more in terms of business and revenue than what you lose from the leakage from fraudulent claims. So in quantified terms, it doesn't seem to be a problem at all. Culture of change. And one other thing I wanted to mention is that I think in the world of fintech and in banking, perhaps we've moved a little earlier. In London, for example, there are quite a few online-only banks, 100% online banks, that provide value on single issues. So you have one that does all your taxes for you. If you're a small company, it's a huge benefit to have. It might combine your expense claims so that that's also done correctly. So all the admin issues that a small company or a sole proprietor will have, they cater to that, and that is the basis on which that bank operates. Another one has algorithm that looks at your spending habits and gives you the optimum saving plan so that overnight it sweeps your money from your current account into savings accounts. So those are the ways in which 100% digital banks are showing value. On the issue of how do you take care of all those issues, the fears you have, and as a large established business with a business to run, how do you effectively try and switch engines on a plane that is flying already in altitude? I think you do need to have some separations between the initiative that is about changing the firm and the initiative that's about running the firm. But you have to signal to all of your employees that you mean business and that you're serious about the new initiative, even if at the moment it doesn't have a lot of revenue, by putting people in that initiatives that are the best in the firm. And that takes a lot of courage, because these people are probably, at the moment, some of your most productive people with good, large revenue numbers next to their names. How do you plug them out of that and put them into, effectively, a revenue-less dream of exploring something else? But it's important from a signaling point of view. The other thing that I remember I did in my banking role is at one point I set up a way in which we were delivering content, dealing room commentary analysis to institutional clients. And I wanted to replicate an online media shop. So I ended up hiring people from online media, totally from a different domain. And they gave us expertise that we didn't have. So I think it's also important to cross-pollinate your domain with people from completely different arenas, because that is where some of the ideas are going to come from.
Great. Thank you. At this point in time, I'd like to remind the audience that if you have any questions for our panelists, please submit it through the app, yeah? And I would read it out for you. I'd like to actually ask Ludwig again. How do you feel, like, I understand you're based in both London and Singapore. How do you feel the local industry players here can support the growth of the ASEAN insurtech ecosystem?
So I guess ASEAN is very diverse. Bottom up, I don't know whether people feel they're members of ASEAN or whether the national identity dominates. But certainly, there are huge benefits to looking at it as a single economic community. You keep on hearing the macro number that in 10 years' time, this is going to be the 4th largest economy in the world. Well, only if you can think of it as a single economy. If not, then it's not really relevant. But I think there are many ways in which it can be seen as relevant. Some of the, Gochek, you mentioned Grab. These are pan-regional. Singapore is an amazing hub for fintech in particular, but just innovation in general. Also, in terms of how established companies adopt new technology, DBS is an excellent example, which has surprised, I think, around the world. It's considered to be one of the best banks in the world in terms of digital adoption. And you can see it from the tone at the top. I remember attending a panel with the CEO of DBS and other bank CEOs, and you could tell in his case, he knew what he was talking about the nuts and bolts of technology. So the tone at the top is very important. The way they practice what they preach is very important. So I think it's Singapore as a country has put a lot of money where their mouth is, but not just Singapore, also Thailand is doing well, and in North Asia you have some tremendous examples. Frankly, it looks more dynamic than a lot of places in Europe, where apart from a few pockets, London being one of those, you don't see the kind of dynamism that you see over here.
Okay. Woody, as the founder of your own company, what are your thoughts about this? How can what kind of support did you receive when you were starting your company? And how can we replicate that here in ASEAN?
Well, first of all, I think I'm very optimistic in terms of ASEAN's digital insurance. I think there is a economic development difference among the kind of more advanced country versus less, but I think the drive to digital is pretty all across. So we just launched a leading insurance company, simple life insurance business on Lazada in Philippines a few months ago on eBao Cloud. And it's selling very well now. So it's amazing that adoption is tremendous. And we have great success in Thailand on eBao Cloud. And remarkably, even in the country of Sri Lanka, people think that they are very backward, but I'm very impressed by how aggressive they are driving digital.
Bangladesh.
So, yeah, I think we have a life insurance company customer using our cloud to connect to wearable devices of all their customers and try to provide real-time health advice, alert, and of course discount on premium based on behavior, all that stuff. So I'm, in a way, very encouraged by how actually some of the poorer countries are moving actually more aggressively to digital than maybe even the more developed markets. So that part I'm very optimistic. And also I think you ask about, as a founder, I'm also very encouraged by the energy in ASEAN, especially actually in the less developed countries. So I visit many countries, literally every month, in Vietnam, in Philippines, in Thailand, in Sri Lanka. I see a lot of young people who are very, aggressive, dreaming very big. They're trying to do things. So I believe there's a lot of potential in the coming few years in ASEAN for driving everything digital, including insurance.
Thank you. I actually have a question here from the audience. I'd like to direct it to Arthur, actually. Because, Arthur, you've worked a lot in both Singapore and Malaysia. Singapore, the penetration rate for insurance is the highest in ASEAN, whereas here in Malaysia, it's still relatively low. So this question, I believe, is from Malaysian. How do we go about increasing it for insurance penetration here in Malaysia?
Well, speaking for our group, unfortunately, we have not a presence in Malaysia.
Well, maybe that's how we fix the problem then.
Yes, we are looking at hopefully securing our presence in Malaysia soon. But I guess in everything else, education is very important. getting the message out correctly on the needs of insurance, targeting that against a certain audience, mining that information to provide the correct needs-based analysis to sell to the potential client. I think that's very important. I think regulators are good in the sense that in Singapore and Malaysia, there is a lot of views around mis-selling and ensuring that that doesn't really happen, because that really hampers the kind of stigma or the image of insurance. Fortunately or unfortunately, we're in Malaysia, it's still very agency-based. So there will be a lot more you need to size up the quality of the agents to ensure that the market has the credibility and the long-term sustainability to penetrate the market even more.
I see. You mentioned regulation, and we have another question here from the audience. I would like to ask Bill, if he doesn't mind. This might be a bit of a sensitive question. It's about regulation. Please feel free to decline if you're not comfortable. Like, in trying to simplify products and remove the complexity, how does Zhong An work with regulators to adopt a more light regulative model as the cost of compliance continues to increase?
Yeah. Firstly, I would say regulator is also fair and reasonable. You should communicate with them. Zhong An did very well, I think, just because regulator also want to change. They also want to contribute. It's the same everywhere. I do believe the regulator in Malaysia, in Singapore, they all want to move. And I met a regulator from Hong Kong quite a few times. Every time I feel encouraged by them. So I really appreciate what Chinese regulator was their attitude. This morning, in the morning session, one panelist mentioned there are two kind of model. China may have more tolerance, but honestly, I don't think so. I think it's just a matter whether you could explain how your technology could help them to reduce the risk. Like this 5 years ago, in the whole world, there was no company built the entire system all the system pure on cloud, public cloud. At that time, Zhong An was the first one. So we spent many time to explain. Then I think regulators are very reasonable. So I really want to contribute here. And maybe today, if I have to say something to local insurance partners, I would say, really work together with your regulator to unlock the power of insurance product. In the digital world, we are moving very fast, but we cannot have a very slow product, whatever process, approval, what process. If you can do products in a much easier way, you could work with the other industry. You could unlock the power of insurance products. I think that is something I really appreciate what Chinese regulator gave. For many products, we only need to file. We do the filing process. So you see the whole result, and you see different kind of products, insurance become a infrastructure for the whole society. I think that's the fundamental change. So again, work with your insurance regulator. I do believe they will support.
Right. Thank you for that. At this point in time, I'd like to maybe open the floor for any questions. Anybody would like to, personally direct the questions to any of the panelists here, like face-to-face as opposed to through the app? I'd like to actually ask Eileen one more question. Yeah, based on what you see in the industry, what do you personally feel is the most interesting trend for 2018 so far?
Well, if you look at it, if we are in this digital insurance world, everyone's coming. I mean, you see a lot of startups, right, coming up everywhere. I'm sure they've approached a lot of you in terms of their products and services, their innovative solutions, and so forth. My take that we will be seeing more and more of this. But back to earlier what I said, I think what is very important is where your organization is coming from. Are you looking at the technology as just to enable you to do your process in a little bit more seamless way? Or are you looking at technology to be the transformational side of the way, not just the way you do business, but towards tapping on a new way of transforming how you acquire business, right? I think that's a very, very critical thing. And like for us also, we looked at it and we felt that InsoTech solutions are out there. Could we build homegrown, right? We actually do have some homegrown InsoTech team within the organization. But we've come to a point that you look at it, you're homegrown, because we want to move that way. We want to move dynamic pricing. We want to move on-demand products and stuff like that. On the same token, we must not stop looking at what's available out there with the startups and with people coming in to offer the solutions. It doesn't mean you have it separate, but there's opportunity to acquire, to complement your homegrown, to complement your business, right? So that's the stage where we are at, because if not, if we keep looking at trying to manage our technology in a way we just do business instead of from a model perspective, you'll always have that conflicting objectives within yourself. So that's where I will see. So you need to know where and what your organization wants to do. That would be my take.
Thank you. So this actually leads in nicely to my last question to the panel for today. Again, directed to Eileen. Maybe you can start us off. So imagine it's 2 years from now. Now it's 2020. We're at the 4th ASEAN Insurance Summit. What is your prediction? What will we be talking about? What will be the important new trend in the insurance industry in about 2 years' time?
Well, 2 years' time, maybe next year we'll probably see the difference since it's moving
it's moving
fast.
so fast.
I think you will see more models coming up, right? I believe a lot of people will start riding on their ecosystem, your affiliate companies or tying in with partners to understand their business and offer insurance solutions. Anything and everything can be insured. It's just a matter of premium, like what Anusha said earlier. But you will also see things like, maybe peer-to-peer, right, coming up, right, community insurance. And in fact, just now earlier, somebody mentioned about you don't pay premium, you only collect the premium when you make the claim. Was it you, Prof? Yeah. So actually, that has already entered the market. Right now, it's in discussions with regulators, that idea. But it's very scary, like what Bill said. It's a very scary world out there. But I think what is important is rather than looking at it from a pure B2C, if you could just do some tie-ups in certain community to try that out first, right? I think the key thing is whether you have the appetite to try, right? And you need to do the trying. It can't be just B2C. It really needs to be B2B2C. And whether your priorities are there, channel conflict, how you want to manage, that's something that will always be there, right? So the other bit that I thought would be good is if you look at a lot of or rather I speak for the general insurance, a lot of the conventional, the people who are really experienced in the market are of a different generation, right? And then you have these startups, all the startups who are like in their 20s and or at most early 30s. And they go from that tangent and the conventional goes from this tangent. I think what's missing is also the coming together of the generations, in my opinion, in the Malaysian industry. And I was just sharing with Mark and Toy the other day as well. I think you might want to really drive from a national and industry agenda of getting together these two teams together and drive it from a council perspective in driving how we want to push the industry forward. That's, if not, you will always have this team going to Bank Negara for sandbox and stuff like that, and then you have the insurance, conventional insurance, trying to get into it, trying to try new models. But I think if we can all have that together, right, that would be maybe something on the agenda for us to talk about within the industry. Thank you.
Okay, I'd actually like everybody to address this question. So, Professor, what do you predict?
So, about 4 years ago, I was at a lunch organized by one of the top European insurance companies. Two of their board members were in Singapore, so the lunch was about. They took a poll of every attendee on when we thought autonomous cars would become an insurable thing. And I think the earliest that one group of us were forecasting, without really knowing anything, was 2020, and most of them was further forward. And I think it's coming to be a lot sooner and a lot closer than people had expected at that time. So your question just reminded me of that. But for the immediate future, just in the next 2 years, I have a slight pessimism about where we are going with data governance in the West. What's going on with Facebook right now as we speak, I think is an issue that needed to be tackled for some time, which is the enormous amount of power that data represents that we're only beginning to understand that these people have. I think we will see a regulatory backlash out in the West on this, similar to the regulatory backlash we had in the banking industry. And then as collateral damage, you had local and regional banks out here in Asia who also then had to be constrained in many ways. So I hope that whatever fallout we get from this is managed. It gives more clarity and not less. But my concern is that in 2 years' time, in this short time frame, we will be dealing with the fallout of this extreme concentration of data-driven power that we have right now.
I see, yeah. I mean, just on a side note, just like share interesting study I read the other day saying how, if you have liked about like 50 things on Facebook, Facebook knows you as well as like your colleagues. If you've liked like 100 things on Facebook, Facebook knows you as well as like your brother and sister. If you like 150 things on Facebook, Facebook knows you better than your spouse. So I don't know about you guys, but I've definitely liked more than 1,000 things on Facebook. Chances are Facebook actually knows me better than I know myself. So Woody, what do you think is going to happen in the next 2 years?
2 years forecast is the most dangerous because it's very easy to verify very quickly whether you are right or wrong. So I need to be careful. So I want to borrow the topic, the fourth industrial revolution, right? So we actually talk often to our partners and customers. 100 years ago, when electricity was introduced to our life, there are a lot of innovators on devices. So there will be Edison, there will be Bell, there will be a lot of these people. A lot of devices failed. Some devices became very commonplace for our life. But one thing that is inevitably needed is the connectivity of electricity. So every household has to have electricity, otherwise all those devices cannot work. So I want to forecast in 2 years' time, insurance industry will become much more connected. That is a no-brainer, that is must do. So no matter whether you focus on the conventional business, motor, long-term life, or the more scenario-based, fragmented nano insurance, you need to be connected. So today, a lot of people think that only those small insurance need to be connected. Not true. Even for big policies, you need to connect your policyholders, your agent, your affinity partners in real time, settle everything real time. Because that itself is going through some big revolution. So if you are not connected today, I'm sure almost 99% of insurance companies are very disconnected today. So you need to put your first focus on building the connectivity. The first is your policyholders. Can you enable your policyholders to interact with you all in real time through a cell phone, no human intervention? That is a test. The other is your agent broker. Can you interact with all your agent broker without any kind of delay, right? All these are, to me, must happen, and I believe in 2 years' time, a huge progress will be made in the connectivity side. Now, the product innovation is going to be hit and miss, just like electricity. A lot of devices never became popular. A lot of insurance product innovation will fail. Probably 99% will fail, but some will become successful. So how do you build a capability to fail fast and fail cheap? Because obviously you cannot work with all the insurtech companies because 99% of the idea probably will fail. But if every time you fail, the cost is so high, then you cannot work with anybody, right? So the trick is create a mechanism, technically, culturally, organizationally, so that you can try a lot of things. And you fail 90%, it doesn't matter. If you have that ability, then you will be the winner, no matter whether it's a blockchain, whether it's AI, whether it's a brush company-based, insurance. All this insurance may have reason to succeed, but by statistics, we know most of them will fail. So how do you become a winner by going through all those experiments and fail 90% and end up winning? To me, that is the must-have ability as an insurance company.
Okay, thank you.
Maybe
Bill?
Woody,
Yep,
it's a very interesting concept he says here. Personally, going through the insurance companies, a lot of times I think you go to many insurance companies right now in Malaysia, the biggest fear is always, oh my God, my core system, it's a legacy system. If I add on some more, it will this and that. And if I put on new models, I have to customize it, the parameters, the peripherals with the core. Those kind of things keep coming up, right? I think what you let on just now was very true. If you have to put aside rather than you keep working on your core system, right, and put it aside, everybody's now talking about going into the middleware, the API, and the apps, right? But a lot of people talk about it, but how much have we gone into it? And if you really want to get the critical mass about reaching out, you need that flexibility in the center to be able to customize fast enough to the partners, the bankers, or even to your agency for new things that they want to do. So it's something that really we got to leverage and think about right now. If you keep wishing or keep pushing aside the core system and so forth, you'll never get there. So, and sometimes it's just too costly to want to think to change, and it takes so long to change a system. By the time 2 years come up, it's already changed again, right? So a lot of times people are now looking towards there. Yeah, thanks.
I try to supplement this point, and before I really enter the topic, yes. And for example, in ZhongAn system, you can launch a package within 1 hour. You can launch a new product within 2 days. So you never worry whether you fail or not because it costs you nothing. And only when you have this level of technology, and you also at the same time you have this very flexible product system, you could try different. Work with different industry. So go back to the forecast. Honestly, as an insurance guy, we don't like to do something forecast. But I try. I have several guesses. Number one, there will be more giants heavily involved in insurance in this region. Because if you look at overall the whole internet world, a lot of American players like Facebook, Twitters, they're too far away. But in this region, we saw huge capital injection from all this PE fund in the whole world. And we saw very, very wonderful internet company like Gojek, Traveloka, Tokopedia, Lazada, Grab. I do believe those guys will start to involve in this industry, for sure, from all perspectives. That's what we saw in last 10 years in China. This is number one guess. Number two guess, there will be one or two well-known insurance pioneer as a digital successor in this region. Because I do believe there are a lot of wonderful leaders, fantastic leader with clear strategy today in this region. And some of you definitely will become successful. So when we talk about the successful cases for digital insurance, you don't need to look at the other region. You can look at this region. You will find someone will become successful. And number 3, guys, I would say there will be massive investment in technology after 2 years. Because if you have more pressure from external world, you have role model in this region, a very successful insurance company, and more people will follow. So everyone will emphasize data, will emphasize technology, and will try to work together with regulator to push harder. 3 guys, maybe one last hope. I believe we may see the support from regulator will reach to another level, because all the country, almost see the major countries' sandbox will run for 2 years or 3 years. And there will be a time for a regulator to reconsider all this policy. What could be the next policy? So if we do that right, we may gain more power. We may unlock the power of this industry and try to use our license power, product power, to bring more industry together as a connector and bring more better service plus insurance to the end customer. That's my hope.
Thank you for that, Bill. And lastly, Arthur, what do you think is going to happen within the next 2 years?
Well, it's not something that I would like to see happen too fast, but I think in a couple of years, the trend would be the amount of AI data analytics coming through and embedding into the systems and the way that we operate. Will this see actually a reduction in human engagement or the workforce among us? Which I think, in a way, it's something that's inevitable if you want to be very efficient about technology. But it's also a trend that you don't want to see happen too quick, because it's something that it's hard to reverse as well. So, but I think it's something that's coming, and I think in 2 years we'll probably want to see, we'll probably see a bit more discussion around that.
I understand. Okay, thank you very much. So, thank you very much again to all our panelists today for their sharing. I think this concludes our session for today. I'm sure a lot of people here has learned a lot more about the insurance in the digital economy. So a round of applause, please, for all our panelists. I also like to thank the organizing committee for making this all possible. And of course, thank you all, the audience here today, for taking the time to join us here. That's all I have to say for now. Thank you.
Thank you very much. Please do stay on stage. However, of course, we'd like to present a token to all our panelists and our wonderful moderator. Ladies and gentlemen, please help me welcome Mr. Chua Sek Guan, the Deputy Chairman of the General Insurance Association of Malaysia, to join us on stage in doing so. I would like to begin by inviting our stellar moderator, ladies and gentlemen, Mr. William Yuck, first and foremost, to receive a token. Thank you very much. And what an absolute honor to have you as our moderator, our Chief Data Scientist of Artificial Intelligence Malaysia. Next up, we'd like to present a token to Mr. Arthur Lee, Executive VP, New Markets and Corporate Governance and Southeast Asia Chairman of FWD Group. Followed by Mr. Bill Song, Chief Operating Officer of Zhong'an International. Followed by Dr. Woody Mu, Founder and CEO of eBao Tech Corporation. And finally, last but not least, I would like to present a token to Ms. Khoo Ailin, Chief Executive Officer of Tune Protect Malaysia. And a very big thank you, of course, to Professor Lutfi. Thank you very much for being a part of this second panel discussion. Can we have a group photo with all our panelists together with Mr. Chua? And ladies and gentlemen, please feel free to take out your mobile phones and snap a photo. Definitely one for the album, if you ask me. Big smiles, straight ahead. And if you can all move slightly more centered stage. That's it, ladies and gentlemen. Let's give a big, big round of applause once again for another riveting discussion up here. And be sure to join us shortly. Thank you very much. We'd like to invite you all to join us back at your seats. Before you go, ladies and gentlemen, we're going to take a short tea break right now. And a big thank you to our co-sponsors for the tea break, which are Moto Data Research Consortium Berhad and also Pickles Asia Sendirian Berhad. So with that, I'd like to invite you all to join us outside for a quick break for tea. And please make your way back here at 4:15 p.m. sharp. Thank you very much and enjoy your tea break.